Well, ladies and gentlemen, welcome back to Boss Economics World, the only place where we take the chaotic dumpster fire of global economics, douse it in satire, and light it up for your entertainment and enlightenment. Today, we're diving headfirst into the glittering, tariff-tastic mess that is the Trump administration's latest economic soap opera, the Great Gold Bar Tariff Tantrum of 2025. Oh yes, folks, grab your popcorn, your calculators, and maybe a gold bar or two, because this one's gonna be a wild ride. Spoiler alert, it's not just about shiny metal, it's about power, politics, and the kind of economic facepalms that keep us up at night. Now, if you've been living under a rock, or maybe just hiding your savings in gold bars under your mattress, here's the deal. The Trump administration, in all its infinite wisdom, got itself tangled in a tariff kerfuffle that sent the gold market into a tailspin faster than you can say, trade war. It all started when the U.S. Customs and Border Protection Agency, those fine folks who decide what gets taxed and what doesn't, dropped a bombshell ruling. They said, hey, those shiny 1 kilogram and 100-ounce gold bars you're importing? Yeah, they're getting slapped with reciprocal tariffs. Cue the collective gasp from traders, miners, and anyone who's ever dreamed of being Scrooge McDuck swimming in a vault of gold coins. But wait. Just 23 hours later, the White House swooped in like a superhero, or maybe a supervillain, depending on your perspective, promising an executive order to clarify that, no, gold bars shouldn't face tariffs. Phew, crisis averted, right? Wrong. Because, folks, this isn't just a story about gold. Oh no, this is a masterclass in economic chaos, policy flip-flops, and the deeper, darker issues plaguing our global financial system. So, let's break it down, Boss Economics World style, from the surface-level shenanigans to the systemic rot underneath. Buckle up. Let's start with the obvious, shall we? The gold market went absolutely bananas over the past 23 hours, and honestly, who can blame it? When the Customs and Border Protection Agency ruled that gold bars were fair game for tariffs, the price differential between New York's COMEX futures and London's spot prices shot up to over $100 an ounce. That's right, folks, $100. For context, that's like the price of a fancy avocado toast brunch in Manhattan, except instead of smashed avocado, you're getting smashed dreams of financial stability. But then, the White House steps in, says, whoopsie daisy, our bad. And promises to undo the whole thing. The price differential collapsed below $60 an ounce faster than you can say policy U-turn. Gold-related stocks, like Newmont Corporation, Agnico Eagle Mines Limited, and even the VanEck Gold Miners ETF, went on a roller coaster ride, erasing gains faster than a kid erasing their browser history after mom walks in. And traders? Oh, poor traders. They were left frozen, shipments halted, staring at their screens like deer in headlights, wondering if they should start investing in Bitcoin instead. But here's the kicker, folks, this isn't just about gold bars. This is about confidence, or the lack thereof. When the government can't even decide whether to tariff a financial asset as critical as gold, what does that say about the stability of our markets? Spoiler alert, it says, run for the hills. Or, in this case, run for the gold vaults. But before we get too carried away with the surface-level drama, let's dig deeper, because, oh boy, does this story have layers, and they're not all shiny and golden. Now, let's talk about why this gold tariff fiasco is more than just a blip on the radar. Gold, my friends, isn't just another commodity like copper, steel, or aluminum, those poor metals that have been battered by Trump's tariff wars like piñatas at a birthday party. No, gold is special. It's the OG of financial assets, the global currency that's been around since ancient civilizations were trading it for spices and silk. Gold is a safe haven, a hedge against inflation, and, let's be real, a shiny symbol of economic paranoia. When the world goes topsy-turvy, people don't run to copper, they run to gold. And here's the thing, the US is a major player in the global gold market. According to the World Gold Council, the US held 8,133.5 metric tons of gold reserves as of 2024, making it the largest holder in the world. That's 78.7% of its total foreign reserves, folks. Compare that to, say, China, which holds just 2,264 metric tons, or about 4.9% of its reserves. So, when the US starts throwing tariff threats at gold, it's not just a domestic issue, it's a global economic earthquake. And let's not forget the futures market. The US futures contract on New York's COMEX is a cornerstone of global gold trading. If tariffs disrupt the flow of physical gold into the US, you're not just messing with traders, you're messing with the entire pricing mechanism of a $12 trillion market. That's right, folks, according to the London Bullion Market Association, the global gold market was valued at $12 trillion in 2024, with daily trading volumes averaging $183 billion. So, when the Trump administration even hints at tariffs on gold, it's like throwing a Molotov cocktail into a room full of dynamite. And guess what? The rest of the world is watching, and they're not happy. Just look at the Swiss refiner who sparked this whole mess by asking for clarity on tariffs. Switzerland, the land of chocolate, watches, and gold refining, processes 70% of the world's gold annually, according to the Swiss Federal Customs Administration. You think they're thrilled about this tariff drama? I don't think so. But wait, there's more. Because this gold tariff tantrum isn't just about gold, it's about the bigger, uglier picture of economic policy under the Trump administration. Let's talk about consistency, or, rather, the complete lack of it. Remember how Trump officials have been bragging that his second-term tariffs won't have exemptions, unlike his first term, when exclusions were handed out like candy at a parade. Well, guess what? This gold tariff flip-flop is Exhibit A in the case of policy inconsistency versus economic stability. And it's not just gold, look at the broader tariff landscape. According to the Peterson Institute for International Economics, Trump's first-term tariffs cost U.S. consumers and businesses $40 billion annually, with retaliatory tariffs from trading partners like China hitting U.S. exports to the tune of $27 billion. And now, in 2025, we're seeing the same playbook, but with even higher stakes. The U.S. trade deficit, which Trump promised to shrink, ballooned to $1.2 trillion in 2024, up from $951 billion in 2023, according to the U.S. Census Bureau. So, tell me, folks, how's that economic nationalism working out for us? And here's the real kicker, tariffs are supposed to protect domestic industries, right? But gold? Really? The US isn't exactly a gold mining powerhouse compared to countries like China, Australia, or Russia. According to the US Geological Survey, the US produced just 170 metric tons of gold in 2024, compared to China's 370 metric tons. So, who exactly are we protecting with gold tariffs? The answer, my friends, is no one. This is economic nationalism on steroids, and it's not just ineffective, it's dangerous. Because when you start treating a global financial asset like gold as a political football, you risk undermining the very foundations of the international financial system. Just look at the data, the US dollar's share of global foreign exchange reserves has been declining, from 71% in 2000 to 58% in 2024, according to the International Monetary Fund. And guess what's filling the gap? Gold, baby. Central banks around the world bought a record 1,037 metric tons of gold in 2024, up from 1,081 tons in 2023, according to the World Gold Council. So, when the US starts throwing tariff tantrums, it's not just shooting itself in the foot, it's shooting the dollar in the head. So, what does all this mean for you, the average viewer, whether you're a finance bro crunching numbers on Wall Street or just someone trying to figure out if you should buy gold instead of crypto? First off, let's talk about inflation. Gold is the ultimate hedge against inflation, and with the U.S. Federal Reserve struggling to tame inflation, currently hovering at 4.2% in 2025, according to the Bureau of Labor Statistics, any disruption in the gold market could send prices soaring. That means higher costs for everything from jewelry to electronics, which rely on gold for conductivity. Second, let's talk about confidence. If the government can't get its act together on something as basic as gold tariffs, how can you trust it to handle bigger issues, like the $35 trillion national debt or the looming Social Security crisis? And finally, let's talk about the global picture. If the US keeps playing tariff roulette, other countries might start looking for alternatives to the dollar, and that, my friends, is how empires fall. So, there you have it, folks, the Boss Economics World take on the great gold bar tariff tantrum of 2025. From surface-level shenanigans to systemic rot, this story has it all, chaos, confusion, and a healthy dose of economic facepalms. Will the Trump administration learn its lesson? Will the gold market ever recover? Will I ever stop making bad puns about shiny metal? The answers, my friends, are no, maybe, and definitely not. Until next time, keep your wallets close, your gold bars closer, and your sense of humor closest of all. This is Boss Economics World, signing off.